We were just getting used to the idea that the truce could last at least a couple of weeks, and the Strait of Hormuz was blocked again, and this time by Trump? The hell? Well, Bitcoin, of course, reacted and went below 71,000. And now, what to expect next and why now is probably one of the best times to buy, we will find out in this video. We will also discuss how the developers found the zero-day error in the Bitcoin mining mechanisms, how a hacker hacked into the Hyperbridge and drew himself a billion Polkadot tokens, why regulators around the world are panicking about the new Anthropic AI model, and why did Bhutan drain 71% of its Bitcoin reserves in just a year and a half. In short, we have something to discuss, so don't forget to subscribe and like up this video, and now let's get started. At the weekend, while we were just relaxing, Donald Trump staged another geopolitical fuck-up and the negotiations in Islamabad failed. Iran did not accept the US terms. And then Trump just said, oh, well, all right, now we're blocking the strait. Since April 13th, the ships have been prohibited from entering and leaving Iranian ports, and the goal is to deprive Iran of the opportunity to export oil, and as a bonus, the resumption of strikes against Iran. Oil, of course, just shoot up, and WTI above $103 and Brent above 101. Bitcoin sink above $71,000. But this is not the first and only news about Iran, but further it's going to be even more. Let's do it chronologically. On April 11th, negotiations between the United States and Iran were held in Islamabad, and it lasted 21 hours, and the result was just zero. US Vice President J.D. Vance accused Tehran of unwillingness to accept the terms. Iran responded by calling Washington's demands unfounded. And Trump did not delay anything. He announced the blocking of shipping in the Strait of Hormuz from April 13th. And the restrictions will affect all vessels that enter or leave Iranian posts. And Trump and his advisors are discussing the resumption of the strikes on Iran, and the markets are already working out the risks of escalation. And what does this mean for the crypto? Rachel Lucas, an analyst at Bitcoin Markets, explains the failure of negotiations provoked massive outflow of investors from risky assets, and oil is rising, inflation risks are intensifying, and Bitcoin is under pressure again. But there is some good news. Lucas emphasizes that the institutional foundation remains solid. Spot Bitcoin ETFs showed the strongest weekly capital inflow since February. Exodus CEO J.P. Richardson made a very bold statement. He said perhaps it's the first cycle in the history of cryptocurrencies when institutions are in bull market and retail investors are not even aware of it. And here are the facts he stated. The capitalization of stablecoins has reached $319 billion, and Morgan Stanley has launched the Bitcoin ETF. Also, Schwab has opened a waiting list for Bitcoin spot trading. And Franklin Templeton has announced a crypto division, and Fannie Mae issues mortgages secured by Bitcoin. In 2018 and 2022, institutions went out with retail, and now this time they just stayed and became more active. Michael Van de Pope supports. It is a difficult time for private investors to pay bills now, much less invest in volatile assets. And the current cycle is an institutional one, and it will last longer. In general, it is not yet clear what vector of actions should we traders take in the short term. I mean, yes, in future, I believe in bull market and growth above the current all-time high, but at the moment, right now, the situation with Iran is not moving, and it is now controlling the price. At the same time, it's obvious that it is in the interest of absolutely everyone to open this trade, because a further increase in oil prices will not only affect the economy, but actually may completely undermine it, and it's not that, like, refueling is expensive. It's more about all industries and the energy sector in general. And what pleased me personally was Bitcoin's reaction to this news, because until recently, every news about the escalation of the conflict and the closure of the strait took Bitcoin below $70,000. But this time, despite a powerful drop of $1,500, we held $70,000 mark 15 minutes after the news released. And in general, if you put a chart of Brent oil price on the top of like Bitcoin chart, it becomes quite obvious that the dependence is decreasing and that Bitcoin is gradually returning to the status of digital gold. In general, my strategy is still the same, just to spot and additional gains from each significant drop. It is too early for a long, in my opinion. And by the way, if you're looking for a reliable exchange for buying and trading cryptocurrencies, I personally use OKX. In my opinion, this is the most reliable platform with the best conditions and support. If you want to try it, you will find a link in the description box down below where you will receive bonuses upon registration and deposit. And this is a referral link, so it will greatly support my channel. Alright, now back to the news, and this one makes me feel really bad. So, researcher Loic Morel discovered a 0-day error in the Bitcoin mining mechanism, and this bug has been living there since the launch of the network for 16 years. And where is this bug? It is in the difficulty adjustment mechanism. Every 2016 blocks, the nodes recalculate the difficulty so that a block appears every 10 minutes. To do this, they measure the time between the first and the last block of the period. And here's the mistake. They take the difference between the timestamp of the first block and the timestamp of the last one. But there are only 2015 intervals between them, not 2016. And the margin of this error is quite small, about 0.05% in the direction of overestimated complexity. But the real problem is something else. Due to this error, the adjustment period do not overlaps, and the timestamp of the last block of one period is not taken into account on calculating the next one. And this allows for a time wrap attack. So how does this work? A miner with a more power control sets minimum timestamps for all blocks of the period except the last one. He puts the maximum label on the last block, and as a result, the measurement period looks longer than it is actually. And the difference is reduced, and in the next period, he repeats this trick, and the gap between the periods is widening. By repeating the process several times, an attacker can reduce the complexity to a level where the network will create up to 6 blocks per just 1 second instead of 1 every 10 minutes. And the consequences here: temporary locks are useless, the network is overloaded, the number of reorganizations is growing, transaction confirmations are just losing their value, and the attacker collects the reward for the blocks at the crazy pace. The good news is that the error can be fixed, and this requires a soft fork within the framework of BIP 0054. And the idea is simple here: the first block of a new difficulty period cannot have a timestamp that exceeds the mark of the last block of the previous period by more than 2 hours. And this restriction restores continuity between periods and makes an attack impossible. Alright, let's move on to the next news. And wow, we have a criminal record here. An unknown hacker has hacked the Hyperbridge bridge that connects Polkadot with other blockchains and issued himself 1 billion fake DAT tokens. The Hyperbridge bridge uses its own protocol to ensure the security of cross-chain transactions, but the hacker found a vulnerability and exploited it. There are few details right now, but the fact is, 1 billion tokens is a serious thing. The developers urgently suspended the operation of the bridge, and the investigation is ongoing. And this is a reminder that cross-chain bridges remain the most vulnerable part of DeFi, and every time a new bridge appears, hackers just start hunting them. And now for the AI news. UK financial regulators are holding emergency talks with the government cybersecurity agency and major banks, and they are assessing the risks associated with the new Anthropic AI model Claude Mythos, which we discussed in the previous issue on Friday. And let me remind you that Mythos is that model that escaped from the lab while the developer was just eating a sandwich in the park, and also it found thousands of zero-day vulnerabilities in major operating systems and web browsers. Now the Bank of England, the Financial Conduct Authority, and the Ministry of Finance are just discussing with the National Cybersecurity Center what to do about it. And in the next 2 weeks, the largest banks, insurance companies, and stock exchanges will receive information about the risks. And of course, the United States is not sleeping and relaxing either. The Minister of Finance, Scott Bessent, and the Fed Chairman, Jerome Powell, have called an emergency meeting with Wall Street executives. Among the invited guests are Jane Fraser, head of Citigroup, and David Solomon, CEO of Goldman Sachs. And they were told just a simple thing: the launch of Mythos marks a new era in cybersecurity, and the model that can hack into any money system is a threat to national security. The Bank of Canada also held a similar meeting, and the goal is to assess systemic risks and improve the operational sustainability of the financial sector. And TechCrunch, however, suggested that all this panic could be just an element of marketing campaign, and restricting access to Mythos attracted attention, and it creates the effect of an ultra-secret supermodel that cannot be shown to mere mortals. Though Startup Isle stated that it was able to reproduce most of the achievements of Mythos using other neural networks, and there is no single model for cybersecurity because the choice of a tool always depends on the task. And there is another version. Anthropic simply enters into exclusive contracts with larger corporations, and top models are now available only under corporate agreements. And of course, small labs cannot even test them, Exi.dev CEO David Crawshaw bluntly said that this is a marketing ploy designed to hide the fact that top models are now available only under corporate agreements. And despite the hype around Anthropic, OpenAI is not going to give up, and the company has announced a new $100 per month data plan that provides greater access to the Codex programming tool. And financial analysis has shown that OpenAI and Anthropic are the fastest growing companies in history. They just have competitors now, and I guess that's okay. In the latest news from the Kingdom of Bhutan, on April 10th, the Bhutanese government sold another 250 bitcoins worth $18 million. Since the beginning of the year, the authorities have withdrawn about $180 million from the National Bitcoin Reserve, and at its peak in October 2024, the kingdom owned approximately 13,000 bitcoins, and in 18 months, they liquidated 71% of assets. And at the time of writing this, there are about 3,774 bitcoins worth $274.8 million left in the wallet. Bhutan's Bitcoin reserve was formed by mining on excess hydroelectric power, but the last receipt of funds was recorded on November 13th of 2024, and since then there has been silence. And the reason is simple: in 2025, the Bitcoin mining economy has just deteriorated dramatically, and the increasing complexity of the network, the debt burden, and the stagnation of the price just led to the capitulation of about 20% of the miners. The profitability of Bhutan's small-scale Bitcoin farm has suffered greatly. Direct sale of electricity to neighboring India turned out to be significantly more profitable. So even sovereign wealth funds are forced to hedge risks, and Bhutan entered Bitcoin with fanfare, and now it's just quietly selling, fixing losses. There's nothing personal there, it's just business. And that's the last news for today. Take care of your deposits, I beg of you, and I will see you tomorrow. Bye.